impact investing is basically looking at building social enterprises and applying capital to them to solve some of the world's biggest problems. So it's effectively, at one level, it's applying the principles of venture capital and other kinds of investing, but it's just doing it to situations or groups of people who are sometimes neglected by the markets or who are sometimes left out of the system which operates in most of the developing and developed countries today. And that is what impact investing is fundamentally as a concept. So impact investing, basically, most impact investors realize that there are 2 or 3 different kinds of capital. On one end of the spectrum, there is pure philanthropic capital, which is grant funding, what is often described as the NGO sector. Those solutions are most relevant and are the best solutions for certain situations. So if there is a flood disaster, or if you are serving the poorest of the poor who really have almost no purchasing power, it is philanthropic grant money which is required to solve problems for them. Then you have people at the other end of the spectrum who have plenty of purchasing power. So if you want to take a cruise to Alaska, those people have a lot of purchasing power and the markets work perfectly for them. But then, especially in the developing countries, you have this big middle. These are people who lack access to good healthcare. Their children often do not get good education. There is the whole problem of bank accounts. Do people have mutual funds? Do they have some savings if somebody falls ill in their family? Those are the sorts of problems that impact investing focuses itself on, because these solutions can be found in the enterprise space and they will get all the benefits of enterprises: innovation, good processes and systems, growth, returns. All of that will happen, but there is a certain amount of risk associated with them. And that's where impact investing capital seeds these social enterprises, helps them reach the next level, and finally gets them prepared to scale to hundreds of millions of users. And that is what is called impact investing. In between philanthropic NGO kind of work at one end, in between pure capital markets, listed companies, big ticket transactions at the other end, is this world of impact investing. Most enterprises are set up to solve problems. It just so happens that impact enterprises or social enterprises are solving problems which have been left out by the market. Even Mr. Elon Musk, because of what he's doing for climate change and reducing emissions, you could actually think of Tesla as a company which is a social enterprise. But of course, Elon Musk is also the richest person in the world today, partly because he's built a very, very successful business. So it's not only about brownie points, but I believe the best social enterprises are ones which have a passion for solving that problem that society has so far not looked at or not been able to solve. There are important differences, and the differences are with both ends of the spectrum. So the basic difference between philanthropy and impact investing is that philanthropy typically has worked on a project basis. There is a set of people in rural Andhra Pradesh, they don't have clean drinking water, so we will take 10 lakhs of rupees and build 10 water wells for them. There is no expectation that building these 10 wells will provide any resources for building the next 10. Sometimes the bad part of philanthropic funded projects is that tomorrow, if the funder doesn't give you another 10 lakhs, the water project is over. The next 10 villages are going to get no water because now X Foundation has not renewed a project. On the other hand, impact investing and social enterprises are built on a business basis. So if building 10 wells gives you a profit of 1 lakh of rupees, building 20 wells will give you a profit of 2 lakhs, and building 100 wells will give you a profit of 10 lakhs. And that's something which an impact investor can back. The longevity, the sustainability, the scale, the fact that there are going to be more and more, in inverted commas, beneficiaries in the NGO space and customers in the social enterprise space is the fundamental difference between philanthropy and impact investing. The big difference, I think, between impact investing and more traditional investing is two things. One is intentionality. Are you just here to make a return for your shareholder, or are you taking a stakeholder approach to the work that you're doing? And is that person who is not getting clean drinking water today also an important part of your decision making? If it is, then in a sense, you are doing impact investing or social enterprise work rather than just pure capitalist profit making at any cost. The second big difference between sort of traditional finance and impact investing is the appetite for risk. Typically in traditional world, you are taking a certain kind of risk, which is business risk. That will the business succeed or not? Will my share price go up? Will I make a return? But in impact investing, because the problems that you're solving are unsolved, the customers that you're approaching have never participated in markets, you're also taking a more fundamental type of risk when you're going into those situations. That lasts for a certain period of time. Once your product has succeeded, the consumers accepted it, you've started making a margin, then scaling is very similar to traditional business. But there is an element of early stage risk which you take when you set up a social enterprise as an entrepreneur or when you invest into it as an impact investor. It's important to remember that impact investors do look at what is often called a double bottom line. So they do look at two kinds of returns. Financial returns are very important to impact investors, and therefore they will focus on it. But they are also interested in the impact returns that their social enterprises or their portfolio companies are making. Impact returns are basically judged by two ways. One is the number of people that you impact, and the second is what is often called the depth of impact. Now, there is a debate on how impact investors have performed on the financial returns part of it. Of course, most of them have done really well on the impact returns part of it. Surprisingly, actually, the data is at the very worst mixed and at the very best quite clear. And by that, I'm referring to 2 or 3 studies. One was done by McKinsey and Company about 3 years ago. Another one was done by Ernst & Young. Those tend to indicate, first, that companies which take into account ESG factors into their investing actually deliver equal or better returns than companies which don't. ESG stands for environmental, social, and governance. And taking account of these factors as you invest actually helps your returns. Beyond ESG, there is the world of impact investing, which is trying to solve a problem. And here, impact investors have typically been able to generate about 11 to 14% IRR returns in US dollars, which compares very, very well with the return that you would get from an alternative investment portfolio if you were investing in just more traditional securities.
Forge Impact is a corpus that will invest in technology startups that will meet target SDGs. But the reason Forge Impact exists today is because we come from the advisory side. We understand the problems and some of the solutions that can be applied to this segment. On the other side, we have been working very closely with LetsVenture. And what we heard from there is that several of their angel investors are interested in investing into impact and have been repeatedly asking for more opportunities. So we really thought this would be a great way to combine our expertise combined with the interest we are seeing from angel investors on the LetsVenture platform. And we said, why don't we launch this corpus where we will be the managers of that corpus, and we will invest into 15 to 18 technology startups that have social or environmental benefits linked to their being. So that is how Forge Impact, came about, and we're very passionate about, what we're trying to accomplish here, and we really think we are solving for a very, very precise problem, which is access to impact deals for angel investors. First of all, technology is going to be the backbone of any company that we will, potentially look into. And that is because we do not believe that all models are venture fundable. And we do care about returns here, financial returns here. And especially for angel investors, they are focused on generating a target return. If it goes above, well and good, but they do have a benchmark, so we are very mindful of that. But since we are going to be segment agnostic and we are going to be looking at startups that have a social or environmental benefit attached to them, how do we really sort of make it more targeted? And we really believe that target SDGs is a good way to go about it. And we identified key SDGs such as gender equality, education, and access to jobs that will really help us to say, these are the startups that we are most passionate about. These are the startups that are really sort of ready for an investment. And these are the startups that can also potentially generate impact returns. LetsVenture conducted a study, I think last year, where it was determined that about 30% of the startups that come on the LetsVenture platform have an impact focus. So there is a huge pipeline over there. And like I was saying, Sachin and I are the founders of CaHa Capital. We are an impact investment advisory. And we have scanned over 100 impact deals and counting. So there is no dearth of pipeline. In terms of portfolio construction, obviously 100% of the startups that this corpus will invest into will be impact focused. In addition to LetsVenture and in addition to CaHa Capital, we are also very well plugged into the ecosystem. We work very closely with other accelerators, other fund managers, and other sort of startup ecosystem builders, such as even co-working spaces. So we have no doubt that we will be able to get excellent organizations onto this platform and also be able to invest into them.
I have been passionate about impact and the intersection of impact with business and capital for a long period of time. The latest sort of manifestation of that is when I came back from the US, I set up CaHa Advisory about 3 years ago now. And this organization is focused very much on finding passionate entrepreneurs who are solving problems in the world and need capital to grow their business. So it's an investment advisory which is actually doing that. But my interest in impact investing actually started with Acumen, which is one of the oldest impact investing funds based out of New York. I worked with them for 8 years in the impact investing space. I ended Acumen as the Global Chief Investment Officer. And during my stint as the Global CIO, I invested almost $100 million into impact startups. India was the focus for me, but I also invested in Africa and in Latin America, which was great because I got an exposure to different communities, different entrepreneurs, different styles of creating impact through the social enterprise space. I invested in a broad range of sectors which Acumen was focused on, but in all of those years, I think financial inclusion, renewable energy, and healthcare are 3 of the sectors which I did most of my work in. I feel really passionate and confident about adding value there. I also worked in sectors like agriculture and ed tech, for example. I have sort of raised impact investing funds over the period that I worked with Acumen. I actually raised 3 funds with Acumen, 1 in Latin America and 2 in Africa, which totaled about $150 million.
My initial introduction to impact investing was through a course I took on impact investing at business school. It was the first time the course was introduced in 2013. I absolutely loved it. I did really well. But then I forgot about it because at the same time I was running a technology company. I was a startup entrepreneur myself, and that took me down the road of tech entrepreneurship for the next few years. When I came back from graduate school the second time in 2019, I had been exposed to impact investing a little bit more, and I also felt that there wasn't enough capital moving into impact. There weren't even enough fund managers, I thought, and I may have been wrong, but as Sachin said, only $6 billion in the last 6 years has gone into impact investing, whereas the global market is about $300 billion. So the hunch was right. So, Sachin and I had been talking for a few years. We've been friends, and we felt that this was a problem that we could get behind, and we felt passionate about solving. And that's how CaHa Capital, came about, and it's been over 2 years, and we've thoroughly enjoyed this journey. I started my career as a commodities trader. I did environmental engineering for undergrad, and because I understood energy commodities, it kind of led me down that path. But I wasn't too happy because I was trading again energy commodities and coal, and it did not feel right being an environmental engineer, and which is why I made the switch to graduate school. So yeah, doing the right thing socially and environmentally has been very important to me, but I did not know at that time, maybe 15 years ago when I graduated college, that I was going to be an impact investment professional one day, but it's been great.
CaHa is basically a name that we chose. It's from Sanskrit, and it basically means something worth aspiring for, something working hard for, something worth reaching to. So we felt it had a nice connotation, very embedded in the ethos of what we wanted to do, work hard to reach something which is worth aspiring for. So that's why we chose it.